Whether you're attempting to start a side business or just looking to earn a little additional money every month, passive income can be a wonderful approach to help you create additional cash flow. This is especially true now that the economy is experiencing widespread inflation. It can help you make more money when times are good and get you by if you find yourself suddenly jobless, decide to take time off work, or if inflation keeps eating away at your buying power. Using passive income, you can continue to make money while working at your regular job, or if you're able to establish a reliable, steady source of income, you may wish to take a little time off. A passive income gives you additional security in every case. So, in this video, I am going to reveal 7 cash-flowing assets for passive income in 2023. If you want to know, stay tuned all the way to the end. Number 7. Rental real estate. Rental property is a wise investment if you want to generate passive income. You can purchase rental homes in any market, unlike equities and bonds. The value of the money you'll make from renting out your house has little to do with how much it costs you. Some people might be reluctant to make real estate investments due to concerns about maintenance costs, or renters who don't pay their rental payments on time, but these concerns can be managed with careful strategy and preparation. Starting off in this kind of investing shouldn't be too tough as long as you have the money required to buy a home, which can begin at less than $100K, decent credit, and enough money for renovations. The primary advantage of having a rental home or apartment block is tax saving. All income from rents and other fees is tax deductible to the extent that it exceeds operational expenditures like real estate taxes, electricity, operational expenses, etc. Number 6. Stocks. Stocks are a fantastic strategy to increase wealth. The share market, which is effectively a huge database of businesses and their stocks, is where you can invest in stocks. A firm issues its own stock to raise funds from shareholders like you who purchase shares of the company's stock in return for foregoing some of your advance cash in order to have more money to expand its operation. The business then pays out dividend payments to shareholders as compensation for being a portion owner of the firm when it generates more revenue through selling its goods or services, much like any other shareholder would get a return from a property investment, rather than taking out a loan from a third party. Risk can be reduced by properly diversifying among many asset classes, as no one asset class can move in lockstep throughout time. This helps guard against significant losses when one asset fails while others function well during recession. Number 5. Bonds. Organizations, businesses, and governments all issue bonds. Their constant interest rates are paid annually or semi-annually, and they are available for buying on the secondary market. From the time they are bought until they expire, bonds pay interest to the shareholders, regardless of whether one of your bonds pays you several $100,000 in return. You won't owe any taxes if you retain it for the duration of its period. Bonds offer both potentials for financial appreciation and income sources, making them excellent investments for portfolio diversification. Bonds should be part of your asset allocation strategy depending on interest rates. But low-yield goods like CDs may not produce enough income from their lower returns to offset inflationary eroding their buying power with time. Number 4. Annuities. Annuities are a type of financial product that let you earn profit on your savings. Annuities are agreements between insurance companies and investors that often provide lifetime payment guarantees. The payout schedule for annuities can be set up to be monthly, quarterly, or yearly. They may also include characteristics like a guaranteed minimum income for life or a particular payment rate over time. With fixed annuities, you put funds into an account with an insurance provider, who subsequently invests it on your behalf in equities, treasuries, and other assets. Once it meets its maturity date, it'll pay out an entire amount equal to your initial amount and as well as any interest gained on their investment over those years in consideration of forfeiting any possible future gains from additional investments. Number 3. E-commerce business. The most common e-commerce business model is the sale of tangible goods like apparel and accessories. There are, however, more choices. You can market and sell your own services as well as digital goods like courses. The best thing about having an online store is that you don't have to be where your consumers are in order to offer them something. Using Shopify or another e-commerce platform, you can launch your own store and manage it from any part of the globe without worrying about having face-to-face interactions with clients or suppliers. You may definitely start without any money at all as long as you have a high-quality product or service and sufficient marketing skills. Number 2. Savings account. A wonderful technique to get a passive income is through a savings account. The only drawback is the low rates of interest and modest monthly payment. But if you manage your funds wisely and can hold it in your bank for at least 6 months or more, it makes more sense as a cash-flowing instrument. All of these banks allow you to start an account with as little as $5, so you don't require a lot capital to do so. Additionally, you won't have to wait longer for interest to be paid. Some of them immediately pay out, while others demand that you hold your money invested for at minimum 6 months before they begin paying out. Additionally, it's crucial to ensure that the savings accounts you choose have rates above average, as the majority give rather low rates while deciding which ones are appropriate for your requirements. Number 1. Notes Receivable. Notes Receivable can be used as security for other loans. This is a great chance to invest your income if you have perfect credit and can acquire a loan with a cheap rate of interest. Notes Receivable are loans from customers who have purchased your goods or services, enabling you to purchase inventory at wholesale costs and conduct consignment transactions. You can also use this cash for taxes or other fees, which is advantageous if they need to be paid before the consumer pays you. Overall, these are 7 cash-flowing assets for passive income in 2023. Hope you have got some value from this video. If yes, please smash a like to this video. Thanks for watching.